Hi everyone, I'm Ching. Welcome back. If you haven't seen the part 1 of our video, we talk about JP Morgan, Wells Fargo and Citi regarding the macroeconomic conditions and consumer sentiment. Please look at our previous video. Okay, part 2 we will talk about Bank of America and Goldman Sachs and hear about what they are talking about the economy and what would the future prospect be like. Let's go to Bank of America. The CEO of Bank of America, Brian, says consumers continue to spend at a healthy pace, even as quite some time has passed since the receipt of the stimulus packages. So overall, average deposit balances are higher than they were both as compared to last quarter and even rose in June versus in May. Right? So all the deposit balances are above pre-pandemic levels. They are seeing no deterioration in consumers' asset quality and consumers have the capability to borrow. So consumer data shows Bank of America customers spend the highest on record in the quarter 2 at 1.1 trillion in total spending, and that is up 12% year over year. So this quarter was also the highest in terms of debit spending, and that is a record for them. So it's the same thing as what Citibank has mentioned, JP Morgan has mentioned, Wells Fargo has mentioned. Consumer spending is still very strong and consumer is still very healthy in terms of their deposit rates. So they continue to see strong consumer resilience and they continue to see shifts in what people are spending. And of course, after the pandemic, there's some kind of a revenge spending on experiences, on travel, and of course, increased spending on fuel due to increase in prices, a bit less on retail stores, and as well as more spending on restaurants. If you look at this chart over here, you look at the credit card spend, right? As you can see, the delinquency rate has been dropping, and the reason is because credit card delinquencies remain near multi-year lows, and because there's so much cash that government gave out, stimulus packages, payments, that they use all these spare cash to pay off their credit card debts. As you can see, within the 30 days, within 60 days, within 90 days and above 90 days, all the delinquency trends are pointing lower. That means people are paying off their debt at a good clip, at a fast rate. So while all this is good news, it clearly makes the Fed tougher, right? Because they have to take into account of inflation. You look at the statistics, they look at the low unemployment rate, inflation would probably be entrenched. Alright, I'm not sure, it's pretty uncertain, but let's see, only time will tell. Next, let's look at what Goldman Sachs say. This is the CEO of Goldman Sachs, David. He mentioned this: there is no question that the market environment has gotten more complicated, and a combination of macroeconomic conditions and geopolitics is having a material impact on asset prices. So market activity and confidence also. Alright, they see inflation deeply entrenched in the economy. And that's not very good. And if it's deeply entrenched, you see people raising prices, you will want to raise price, and if you raise price, other people will want to raise prices too. So it is a vicious cycle. And what is unusual about this particular period is that both demand and supply are being affected by exogenous events, right? Events that is out of their control, the pandemic and the war in Ukraine. So in his dialogue with CEOs operating big global businesses, they tell him that they continue to see persistent inflation in their supply chains. So it means that a lot of businesses would need to raise prices. Of course, on the other hand, their economists meanwhile say that there are signs that inflation will move lower in the second half of the year. But however, the answer is uncertain and they will be watching it very closely. So they are seeing shifts in monetary policy, and those shifts will continue to tighten economic conditions. He expects there's going to be more volatility, there's going to be more uncertainty. In terms of looking forward, the economy is less robust based on macroeconomic variables, from GDP growth, which is going down, to unemployment levels, to inflation, right? They are seeing a probability of a recession and a possibility of a stagflation, which is not very good also. However, overall, the health of consumers is very strong. Credit environment for consumers is still stable. And obviously, if the environment continues to be more negative, right, looking forward, if the US economy is moving towards recession, they will expect the increase in, of course, increase in unemployment and reduce in consumer health. Okay, that's all for today, and if you like the video, please click like, please subscribe, so that when there are future videos, you'll be able to tune in to very quickly. Thank you very much, guys. Goodbye.